Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of December 18th, 2023. We had a big week last week in the stock market, in the S&P 500. We're going to talk about that today. We're going to look at the different sectors and how they performed, the economic reports that came out, and we're going to look at the individual trades that we've got on the Tasty Trade option trading platform. I think it's super important that we understand the different ways that the rich are getting richer. We want to utilize the same tools and strategies that they're using so that we can profit safely in any market. I promise we're going to dig into the option trading details, tips, and tricks. So if you haven't subscribed already, please do that now and make sure you hit the like button as well. I really appreciate it. It helps the channel a lot. So thank you very much. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks outright. Disclaimer, I'm not a financial planner. I'm not recommending trades. Please do your own research. And if you're learning, please remember to start small. All right, guys, if we look at the S&P 500, we want to always know where we are in the market. And if we look last week at the 5-day chart, we started the week at 4604 and ended at 4719. So we were up 2.4% last week, which is huge. We are year to date up 19%. We started at 3824 and we're up now at the 4719 level. And forward PEs, price to earnings, for the S&P 500 is 19.3 right now, so way above the 17.5 10-year average. The U.S. economic calendar, if we look at Market Watch, last week we had CPI and PPI, and they came in as forecasted. So that was good for the market and why the market was up, and inflation seems to be in check. And then if we look at next week, we've got jobless claims on Thursday, and Friday we've got PCE as well. And then if we move on to the FactSet Earnings Insight report, this is a report I like to look at. We can look at earnings growth for Q4 so far is 2.4%. So that's pretty good. Things are improving. And then again, that 12-month PE, we've got 19.3, which this points out as well. And if we go to page 16 on the report, we can look at calendar year 2024. We've got earnings growth projected at 11.5 and 5.5% for revenue growth. So the year is expected to do well and be good in 2024. And even in Q1, we've got 6.2% earnings growth and 4.3 revenue growth. And then in Q2, jumping a lot to 10.5 and 5.2. And then if we go down, I always like to look at the PEs, the price to earnings, to see what sectors look like possible, more there's potential. And again, energy is still not up there. The PE is 10.8 versus the 10-year average of 15.6. So I do really like energy right now. The financials actually jumped last week, and we've got a couple of trades on, but financials are now fairly valued, 14.6. They're actually above the 10-year average. And utilities are still low, a good buy. And I like healthcare, although it's jumped up a bit as well. If we go on to the individual sectors, we can look at the 5-day, and you can see everything is up, and especially real estate and financials were up big last week, as well as consumer discretionary. And then if we look year to date, everything again is up, and we've got technology leading the way, consumer discretionary, and communication services. So with that, let's jump on the platform and go through the individual trades. I actually put on a crude oil trade last week. I have told myself I wasn't going to trade futures too much because they don't have the advantage of the theta decay. Some people like the fact that they don't have that, but it just moves on to the next monthly contract, and there's no really theta decay, which is, I think, one of the advantages of selling options, definitely. So I try to stay away from futures for the most part, but when oil gets down to the 70 level, I like to throw on put credit spread because I think that it's not going to go much lower. That this SPR, the Strategic Petroleum Reserves, are already low. We're not pumping oil, and there's definitely going to be a need for it. So I like it between 70 and then 90. So I'm going to stick with the put credit spread. Um, I actually closed one out last week for an $80 winner, and this one's up $24 already. And this is just $500 that I'm risking. And when I put that on, I think I was at 180 collected. So I collect about a third the width of the strike. The trading platform actually doesn't show the chains for futures yet, so I think they're working on that, but I'll share that with you in the future when they do. Um, Accenture is an earnings trade that I'm going to place this week. It's a great company, and I'm going to have a video coming out in the next day, probably tomorrow, on Accenture, FedEx, and Micron. So keep your eyes out for those. But I'm going to trade all those earnings plays this week. They all have earnings. Um, so we'll talk about that. But I'm looking at an iron condor. This is a placeholder. You can see it's way above the market. This trade actually is trading at $259. I've got it in at 452. So I'm just going to adjust that prior to the close. I think Accenture has earnings. Let's see if we go here on the 19th. So that would be Tuesday morning. So we would place the trade Monday before the close because it will change Tuesday morning after the earnings come out before the open. Adobe is an earnings play that we had on, and it actually went down quite a bit. You can see it was up at this, high 630 range, and it dropped down to 584. I was actually pretty surprised that it's this low, but I'm definitely long Adobe now. I'm going to leave that on until it comes back. But they beat both top and bottom line revenue and as well as earnings, and but they did guide lower again, which is typical. I mean, I think that's smart as a company to guide lower and then try to beat next time. But so what I did was I closed the trade and rolled out. I've still got one on the 590, 580. We're at 584. I think it can easily jump up there. And then I actually have a 580 and 585 put credit spreads on. So I've got 3 spreads on in this. And you can see we can make $1,449 next week if it moves up. And that's what we're hoping for. But actually right here, we're already profitable should I close those out. But that's what I'm looking to do in Adobe. And yeah, it's probably not too pretty with the 30-day chain because it dropped last week. But I'm looking to make that up this next week as Adobe hopefully should rebound. It's a great company, great stock. Everything was good. They just got it lower. So and again, we're 33 days out on these 2 put credit spreads, but only 5 days out here. So next week, if it doesn't jump, I'll just roll these out to January, and then I'll have 3 sets on in January. And then if they don't come back in January, which I certainly think they will, then I will roll to February. But that's kind of the play. I know Adobe's a good stock and I like it long, so that's what I'm doing in Adobe. AMD has traded within a range and been really good. I think in the last 30 days we've made a couple $100. In the last 6 months we've made $747. So just trading within a range with AMD. 130 to 150 we're at right now, and the stock's right in the middle at 140. So we are profitable anywhere within this range, and we've got 33 days to go. So AMD is a good stock, and it's been doing well. They're big in AI, and I've got a target of actually 140 right where they're at right now long term. So I think it's right in the middle of the range and doing as we'd like it to do, selling premium. Bank of America, I just got back into. I had been out of the banks, but they jumped last week, and I'm glad I did get into it. You can see we're up $242 on this Bank of America trade. So just in the last 30 days, $242, and we've gotten hurt pretty big before that, being too early in the banks. But I think now that the economy is turning, I think now's a good time. The bank stocks are still at lows, so either selling puts or put credit spreads, or buying leaps options long term, like I've got here, because Bank of America is so low. Uh, it's a good way to go. And yeah, just $242 just in the last week, actually, the few days since the 13th. I bought it for 750 and it's up 242 right now. So I think the bank stocks. The other one I have on is Wells Fargo down here, and same deal. I've got leaps on. Um, Chewy is another one that we have on. There was a recent earnings, and then I added a call. I did a video on this one, but we're right. We've got the 22.5 straddle on in Chewy, and even with it moving up and breaking over the last 30 days, we're still up 120 bucks. So it's done well. Long term, I've got a $34 target, but we're profitable anywhere within this range, and I think it will move up slightly over time, but it just had a little bit of a jump. And IVR is still good at 35, so good, still a good stock to sell premium in. Costco was an earnings play as well, and this one is trading right now at 658. It jumped up big from 610, so it jumped up quite a bit, and we are right now right in the middle of the range. But yeah, so I think we're in good position right now. We've got $561 that can come in with these. Looks like I've got 2 iron condors on, and right in the middle of the range. So those should come in over the next couple of weeks, and we'll collect premium. And because it just had earnings, it's probably not going to move too much up or down. So sometimes after earnings plays are good as well. DraftKings is another one I like as well long term. I've got leaps in DraftKings, and it has done well over the last year. I think we've made $1,700 just basically with leaps options, and then when it does have a big move up, I'll sell calls against those leaps. But it's trading in that 35 to 39 range now, and I think it can get up to the $50 range. That's my target. FedEx, we've got an earnings trade that I'm looking to put on. I've got it above the market right now, but I'm looking to do a iron condor in FedEx and Accenture and Micron next week. I like to do iron condors, and sometimes I'll skew them depending on whether I'm long or short the stock to one side or the other. But again, keep an eye out for that video. Humana. I closed one of my put spreads. We've been hurt. It's dropped big. I like healthcare, and this is a good stock, but lots of cash. But I think with the economy doing well and interest rates expect to be cut next year, I still don't think it's going to be until the middle of the year. The Humana has taken a little bit of a hit. But it's trading at 461 and it's down from 481. But I'm going to stay long with the put vertical, and I've got a target much higher in the 550 to 580 range in Humana, so I'm going to stick long. Lennar, that was an earnings play that we had on that has not come in yet, but they came out with earnings, and they beat top and bottom line revenue and earnings, and they stayed within the range, but it just hasn't come in because we traded the 33-day. But I'm comfortable with where it's at right now. It's right in the middle of the range, a little bit lower, but it's home builders are going to continue to do well. There's a shortage of inventory in the market right now, which will keep prices high. L3 and Lockheed Martin, both defense stocks, both have done really well. just in the last 30 days in L3, we've done really well. Let's see. We just started recently trading, but $670 in the last 30 days trading L3, just put credit spreads. But now you can see it's moved up quite a bit. Um, but I still have a $240 target, so I still think it has room to run, and it's a defense play. And there's wars going on right now, but I'm going to stay long and while it's still working. Same thing with Lockheed Martin. It hasn't done as well, but let's see, in the last 30 days, it's made $157. So again, it's moved up, and I've got my put credit spreads, and going to stay long. Lulu, we're doing iron condors right in the middle of the range. We're at 491, right between our uh, put credit spread and call credit spread. And Lulu, I think, is a great retail stock. $650 in the last 30 days we've made trading it. We did a big earnings trade, and it did really well. And my target is it's a little bit above 491. I had a 1-year target of 450, so it's moved up quite a bit, but um, I'm comfortable with where we're at with the Iron Condor, and IVR is still pretty good with 22. Micron earnings trade. Keep your eye out for that video. Palantir. I'll just jump onto that. We've got 2 calls sold against my leaps, 3 leaps options. So it has been trading. Palantir's done really well for us, and just over the last 30 days, we've made over $600. Yeah, $666, and it's been trading in that range between 17 and 20. Um, and it's come down a little, and I'm glad I've got those calls on because they're going to start making money as it comes down, and um, then I'll sell those when they're profitable and wait for it to go back up. So I like trading both sides of Palantir, and it's done really well. SoFi is, to me, a no-brainer stock. Great online financial company doing loans, and it's a fintech and huge potential. And I'm going to have a video coming out. I think this is the no-brainer trade for 2024. So I'm going to put together a video and talk about this, but it's really come back fast just last week. We're now up just in the last 30 days, $932. And I think this thing is going to continue um, throughout the year. It's been trading, it's at $9 right now, but it was at $6. I don't even know what my target is, but it could double, I think, next year easily. So if we look at with the leaps, it's just like owning the stock outright. As the price moves up, we make more and more money. And if you look here, even if the stock moves up to 12, based on what we have on, you can look at my P&L at expiration. It shows $4,816 is what we'd make. So almost $5,000. 12 and a half, we make over $5,000 on it. So I really like the leaps options in low price stocks like SoFi. I've got 300 shares that I own outright as well, but then 11 leaps options. SQQ is a hedge, so it does well when the market goes down. So obviously last week it didn't do that well, but when it does go down, then I'll that's my hedge, and I'll sell some SQQQ. TDoc, Teledoc has done pretty well. It's at 20 right now, and I've got 3 leaps on, and I jumped over SPX. I don't have any SPX on right now. I was actually traveling last week, so wasn't able to watch and trade the SPX, and I'm glad because the market was up big last week. That would have hurt me selling call credit spreads. So in a bull market as well, I don't like to trade SPX. So I'm hoping and thinking that even if I were able to trade it and had the time last week, I wouldn't have, and would have sat on the sidelines, as it was just a raging bull market last week. But TDoc, over the last year, yeah, done pretty well. $630 over the last year, and we're just doing leaps and poor man's covered calls, and it's trading between that 15 and 20 range. And right now it's up at the top end of that range, but I think it's got good fundamentals, and overall healthcare, virtual healthcare is going to continue to do well. Verizon, great dividend stock, so I just own some shares outright. Wells Fargo, I mentioned, we've got leaps just like Bank of America. Wells has done pretty well. I think now it's going to start kicking in and doing even better going forward. But we've done okay in it, but the banks haven't taken off. But $400 over the last year. But I may look to put more into Wells as well. And then ExxonMobil, the oil stocks, definitely have not done as well as I thought they would, but I am long oil. And um, if we look at the chart, yeah, it's down quite a bit over the last year, but as it moves up, we'll continue to make money. And I think the higher prices of oil, I think oil's at a low right now, in the at $70 range, but as it moves up, ExxonMobil will print money and continue to do well. So I'm definitely long oil. And if you remember, the PEs on the energy stocks are down quite a bit. So those are the trades that we have on. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Share the video with a friend. Leave a comment. Let me know what you're trading. Any questions that you have, I will be sure and answer. Thanks for watching. See you in the next one.